Welcome back to the deep dive.
Great to be here.
We're jumping straight into the materials you sent over today. It's all about Bitcoin's recent price action.
Yeah, it's been quite volatile, hasn't it? Lots of ups and downs.
Definitely. So our mission really is to unpack what these sources are telling us about what's behind these swings.
Exactly. What's pushing it up? What's pulling it down? Let's try and make sense of it based on the articles and notes provided.
Okay, so where are we right now? As of today, May 25th, the notes say Bitcoin is hovering around $106,992.
That's the figure mentioned, yeah. And that actually represents a slight dip, just over 1% down in the last 24 hours, according to the material.
Right, but it wasn't long ago we saw a high point. The sources show it touched $112,000 just last week.
It did. So a strong move up, and now, like you said, a bit of a pullback.
And the material also flagged a key level to watch if it keeps dropping.
Uh-huh. The experts cited in these articles seem to be looking at the $94,000 mark. They suggest that could be a pretty significant support zone.
A support zone, meaning like a potential floor.
Yeah, basically. A level where, buying interest might kick in strongly enough to stop the price from falling further. That's the analysis presented.
Okay, this is where it gets really interesting for me, the why. Let's look at that run up first, towards 112K. What did the sources say was driving that?
Well, the sources point to a few bullish things lining up. Positive regulatory signals coming out of the U.S.
So less uncertainty, more mainstream acceptance, maybe.
Kind of signals that, yeah.
Right.
Makes institutional players feel a bit more comfortable. And then there's the money flowing into those spot Bitcoin ETFs. That's a big one mentioned.
Right, easier access for traditional investors.
Exactly. More demand. And finally, they mention a weaker U.S. dollar.
Which makes assets like Bitcoin look, relatively more attractive?
As a store of value, potentially, yeah, according to the analysis and the sources.
Got it. Okay, so clearer regulations, ETF money coming in, weaker dollar. Sounds positive. But then we have this recent dip. What's putting on the brakes now, according to the material?
So the notes highlight increasing market uncertainty. And a big factor named specifically is geopolitical tension.
Geopolitical? How so?
Well, the sources explicitly mention U.S. President Donald Trump's threat of imposing pretty substantial tariffs. They talked about a potential 50% tariff on EU imports and even a 25% one on Apple iPhones.
Wow, okay, tariffs. How does that connect back to Bitcoin, though? The sources explain that link.
It's fascinating, Red. The suggestion is that this kind of friction, these trade tensions, they don't just hit traditional markets. They crank up the overall perception of risk globally.
Okay.
And that can lead to a general risk-off mood. Some investors might pull back from assets seen as more volatile, like Bitcoin.
So it's like a ripple effect from that broader uncertainty.
Exactly. That seems to be the connection drawn in the material. And beyond that, there's also just plain old profit-taking mentioned.
Ah, right. After hitting $112,000, people cash out.
Pretty natural, yeah. Especially for shorter-term traders. That selling adds pressure, pushes the price down a bit.
So it's this mix. Structural positives like the ETFs, but then these immediate negatives like geopolitical jitters and profit-taking. Did the sources offer any kind of forward look?
They did mention a Bybit executive's view, quite optimistic actually, predicting Bitcoin could hit $125,000 by the end of Q2 2025.
And what's that optimism based on?
Pretty much based on those same upward drivers continuing. Ongoing regulatory clarity, sustained institutional money coming in through those ETFs.
But they acknowledge the current choppiness too, right? It wasn't all smooth sailing ahead.
Oh yeah, definitely. The sources are clear that while some see a bullish longer-term picture, these short-term fluctuations are expected to stick around because of that profit-taking cycle and, importantly, that geopolitical uncertainty still hanging in the air.
Okay. So bring this all together for you, our listener. What's the main takeaway here?
I think it really shows how Bitcoin, even though it operates in its own sort of digital realm, isn't immune to the wider world. It's deeply interconnected with global economic and political stuff.
Yeah. The sources you provided really illustrate that. Things like trade tariffs, regulatory decisions, they're clearly shaping the price.
Right.
So just to recap, we've seen the price dip to around 107K, but that followed a high near 112K. There's potential support at around 94K. And the drivers are this mix. You've got the positive backdrop of regulation and ETFs, but then the headwinds from geopolitical fears, like those tariff threats mentioned, and simple market profit-taking.
Understanding that dynamic, that push and pull, really helps make sense of why the price is moving beyond just the numbers themselves.
Absolutely. And it leaves us with a really interesting thought, something for you to mull over.
Yeah.
How do these traditional political and economic pressures, like potential trade tariffs, which seems so old world almost, how do they actually interact with and influence something like Bitcoin, which is supposed to be this separate, decentralized digital thing?
Yeah.
It's quite the puzzle.
Definitely something worth thinking about as you watch things unfold.